take note is if you need CPE, which most of you here are trying to get CPE, you'll be politely annoyed is probably a good way of saying it. You're going to be seeing this green button. It says, I hereby certify that I'm present and actively participating in this webinar. This event, you have to click on it. It's going to pop up every now and again. If you don't, then shame on you. There's nothing you can do about it on the back end. So you have to be clicking on that, okay? So it's a polite little tap on the shoulder. Hey, you're still here with us, present, and we have to follow rules just like everybody else when it comes to providing CPE, continuing professional education. So do not ignore that polite little green button. You should see it on the top of your screen on the right-hand corner. With us today is obviously myself, Sonia Luna. I'm the founder and CEO of Aviva Spectrum, and we've got Rohn Martino. Ron, do you want to just say a quick hello and give us a 2-minute overview of your background, Ron?
Sure. Thank you, Sonia. So I am Rohn Martino. I am the Senior Manager of Sales and Marketing at CIMCON Software. And, CIMCON, we work with clients to help reduce their risk and improve business processes around spreadsheets, essentially is what we do.
Great. And this is the perfect opportunity, Ron, for us to get together. Ron and I met at a conference. I was speaking about the new Audit Alert 11 and more importantly, some of the standard requirements on testing controls over data like what? And then in the conversation to the group, I was mentioning that as accountants and financial folks, we love Excel. We love Excel. We think it's the best thing on earth, and we need to control that. And therefore, for us, I wanted to collaborate with someone who deals with both the problems and solutions and dealing with it. We're going to provide a solution that is free in the marketplace. You'll be able to download it. There's a downloadable file here in this webinar for the live participants. It's an Excel file. It's called 2013 Critical Spreadsheets Webinar Share. And of course, that's in Excel, something that you know and love. So we made it available to you because some of you may only have 1 or 2 critical spreadsheets for your Sarbanes-Oxley stuff, and that's fine. But Ron and I are going to cover some more complex issues in the standards, which is the review process, etc. So that being said, we're going to kick off the meat of the technical update for this Audit Alert 11. The agenda for today is to cover Part 2 reports. Part 2 reports are those reports that your auditor doesn't want you to see, okay? They're actually hoping that your audit committee never really goes through the PCAOB website and reviews those Part 2 reports. It gives us a lesson learned, okay, of what these auditors got digged on, and we're going to show you where Excel was used in these Part 2 reports where the auditor failed. So just so we're clear, the PCAOB audits your external auditor. Right? They audit the Ernst & Young, PwC, they audit your external auditors, and when they fail, and they fail to such a high degree that they haven't fixed their problems, okay, a Part 2 report gets issued, and that is made public to everyone. How is it made public? It's on the PCAOB website. So it's not there's no email blast the PCAOB uses to make sure that everybody is aware of, hey, this auditor really failed and they haven't corrected their problems. It's you, the users of these services, you have to take a proactive stance and actually go to their website and download it. Part of the agenda is also to cover the alert itself. We're going to cover specific pages of this new alert. It was issued in October of last year. We're going to cover a brand new coin term that the PCAOB came up with for auditors called level of precision. Okay, this is common audit lingo now, okay, that was never really used in the past, and so we're going to cover level of precision. What's the old versus the new because of this new audit terminology and the expectation called level of precision. And we're going to talk about key report testing, and we'll cover some resources for you that are free and some other stuff that's an Excel diagnostic for you. And obviously we'll cover some questions in this 1 hour webinar that we have with you today. So quick polling question. All of you have this typing in little box, the Q&A. So my question to you all who are participating with us today is, how many of you have actually updated your controls using this new PCAOB Audit Alert 11 standard? Okay, so I have a couple of boundaries here. If you are running to the finish line, meaning you're pretty much done, golden, you're 75% through, select A. If you're B, you're barely getting there, you're kind of 50% done, type in B. If you're formulating a plan, you know your auditors are kind of humping you, but you're really not in the group, maybe you're high-risk areas, select C. And if you have no idea what I'm talking about, okay, you can be private, a nonprofit, etc., or you're just, not dealing with this issue, select D. And then I'll give you guys a quick reveal. I've got one more. I'll give you 30 more seconds to pick these polling items, A, B, C, and D. For A is 75% done, 50% is B, C is formulating a plan, and D is you just have not started. Okay. So believe it or not, for this particular group, you guys are, most of you are in C, 25% there. In other words, you're formulating a plan. So this actually is a pretty good webinar for most of you then, because you're not hitting a home run. You're not at that 75% mark. And for those of you who are 75% or greater, congratulations. You'll probably be able to lead the pack and maybe share and collaborate with other people on the COSA implementation group. So that being said, just a quick refresher for those of you who just joined us. If you want CPE, there's going to be this polite but yet constantly annoying green button that's going to say, hey, are you awake? Are you still there? You have to click on that button. Okay, it's a green button, and it basically certifies that you're present, you're actively participating, et cetera, et cetera. So let's take a look at the PCAOB Alert 11 document. Here we have, it says here, PCAOB, right, the Public Company Accounting Oversight Board, Staff Audit Practice Alert 11. I just abbreviated, say, PCAOB Audit Alert 11. It's just quicker, faster, and easier for me to remember, quite frankly. What it's about, right, what's the source, what the why factor, about auditing controls over your financial reporting. The why factor is back in December of 2012, the PCAOB gave a very nice Christmas present to the external auditors. Okay, it was the final result of they took a period of 2 years, okay, of internal control audit failures, okay, of the top 8 firms. So they took a period of 2 years. And they said, okay, for those 2 years, let's look at these top 8 firms. Why did their internal control portion of the audit fail? They did a root cause analysis, then they came up with a final study in December 2012. So, of course, the Securities Exchange Commission, which oversees a lot of the rulemaking that the PCAOB does, they said, hold on, okay, you've completed this study, so what's the deal, right? And boom, there came along in October this audit alert of, by the way, this is some guidance for you external auditors to pay attention to. We really want you to be abreast of some issues. So what were some of the issues? They found out that there was not a lot of audit layering. So the auditor would stop at a signature and maybe ticking and tying some of the numbers. They said, no, you got to go deeper. They also said, look, when management decides that there's some judgment, talk about how they're thinking about that portion of judgment, okay? So you need to understand their review controls of how they're thinking and then document what that is like. And then they wanted more system controls. And I'm not talking about your change management, your logical security. That wasn't the issue. The issue is management relies upon different worksheets or reports, etc., to test the validity of completeness or accuracy of a particular control, or they manipulate certain reports, quite frankly, straight from the system. It could be using crystal reports, etc. And they said, well, wait a minute, you got to do more detailed documentation and testing in that regard. So what did the external audit firms fail when it came to closing the book? So you remember earlier I talked about this Part 2 report, right? The really nasty stuff that, hey, if you don't clean up your act well enough, the PCAOB says, we will now then make public how bad your audit shop is because you haven't fixed it. You haven't fixed it up so well to the degree that they like it, they, the PCAOB. So here's a report straight from the firm. I never reveal the firm name, and the reason why is all the firms, the major ones, got similar comments. If I dig through the 54 or 40 some odd pages, I can almost promise you I can find the exact same paragraph. This one deals with period end, right? The closing of the books, your financial reporting process. So what's the big deal here? They found out that journal entries, okay, when the firm, the audit firm was testing journal entries, they did some procedures, audit procedures, but they didn't include the effectiveness of the company's review process. So when they say the issuer's review, put your like auditor hat on and go ding, 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 ding. What they really mean is the management team, okay? And they said, well, wait a minute. The audit firm looked at, you know, comparing information like the journal entry to the supporting documentation or to the ticking and tying to the GL to, let's say, a footed amount. And they're like, okay, well, that's okay, but remember that new term, level of precision, saying, well, wait a minute. That doesn't tell an objective third party like the PCAOB what level of precision did they really get from ticking and tying a bunch of numbers. And that's exactly what they did. Okay, so the firm took that journal entry, tied it back to supporting a document, and it footed and it tied and it was like thumbs up, great. The PCAOB saying, well, okay, well, what were they thinking? Right? What was the management thinking when they posted that journal entry? And we're going to cover the plain English of what level of precision is in just a bit. So here we have yet another period end close process. This is another Part 2, okay? And it says here, hey, wait a minute, the firm didn't have such hot, cool controls over the reporting process. It was insufficient. Specifically, right, they were looking at test of controls. They were observing signatures as an evidence of review, okay? And so what the PCAOB says is like, okay, that's okay, but, right, and every time there's a but or and preparation, again, that phrase, level of precision, was failing. The firm didn't have enough procedures to prove the management team, right? So we know that the English word of issuer or management, it's really the company, didn't have enough information for even the firm to understand how the management team thought of, right, that particular monthly reconciliation or reporting package. And this is coming from the level of precision term is coming from that Audit Alert 11 that was issued. So what do they mean, level of precision, right? I mentioned earlier it's a new audit phrase, and now even universities are starting to talk in this language of level of precision. It's basically answering a question: how detailed is management's review of, and then it could be a journal entry, it could be an accrual, it could be tax provision, it could be your month-end close package. Just where it says journal entries, you can insert anything in there, okay? It's how detailed do they think about the issue. And then you document your thought process. So what's the plain English version? Are you, the management team, when you book that AR reserve or that journal entry, are you thinking about a certain dollar threshold because it's an asset account? Or if it's a liability account, are you looking at certain dollar thresholds? Are you looking at a percentage of something, like a percentage of revenue for AR? Are you looking at, or you know, let's say your reserves on, or deferred revenue, you're looking at different percentages, or it could be on the asset side as well. Are you looking at certain geographical locations when you, let's say, review a reserve, or let's say a liability on the books for warranties, etc.? Are you looking at certain lines of business? Okay, so we're seeing in the marketplace not just one line of business. Most companies don't just have one source of revenue coming into the company. It's usually multiple sources of revenue coming in. And management does think differently about an AR or a tax provision or, let's say, a month-end package based on the line of business. You have to document those reasons why. And then other risk factors. It could be a timing, like your review process is more thorough and you think about XYZ more thoroughly because it's a quarterly issue for cutoff. And then timing. Well, when is this that you're really thinking about this issue, especially for reporting purposes? So this is kind of a nuts and bolts. Like if you had to write a paragraph all over again about your AR analysis, you would probably want to make sure you're inserting some thought process of each of these items here. Now I wanted to move into the good, the bad, and the ugly. Okay, I call it the what was good and then what's the new language that we're seeing in the marketplace. So the older language it was okay. It wasn't that bad. And CFOs actually like doing the older language. They like putting in something like this. Quarterly, the controller reviews the AR allowance for adequacy. He's looking for reasonableness for the reserve amounts. And at the end of the day, once a quarter, he initials and dates the AR reserve analysis. So that analysis is in Excel. Okay, so he just signs off on it, dates it, and it's done timely, etc. You tick and tie the numbers, and we're done. So that's what we used to do. Remember that report the auditors just matched up, right? The journal entry and the totals, and they footed it, and they probably had some really colorful tick marks, and it was great and dandy. That's what we used to get away with, okay? Used to. The new standard is asking us to elaborate the thought process. So taking the older, now we're exposing into the new, okay? You have to say to the reader, what's your thought process when you really do review the analysis of AR reserves? Are you looking at significant customers? Well, what are they? Define the boundaries of that. Here I have significant customers, the outstanding balance is greater than 10K and 5% of AR balance, and those that are under that threshold, guess what? The controller looks at them differently. So under a certain dollar threshold, you're applying different metrics for you to evaluate the AR reserve. And in this case, the controller is saying, look, I'm looking at my big ticket items. This is my threshold. When it goes below the big ticket items, I'm now evaluating it this way, right? And as the controller is performing their duties, when there's adjustments, and this is a critical bing, 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 audit alert, adjustments, when they're done, it's through email, okay? He's pinging the AR manager and says, hey, look, ABC isn't looking right. I think we need to up it or down or correct the reserve, etc. But ultimately, there's an agreement, okay? And that's done via email. So what does that do to someone like me, right? I have to audit email trails, right? Because now there's no real link. It's documented. The final conclusion on the balance for certain things is I gotta figure out, well, was this really confirmed? Because ultimately that journal entry posting was finalized based on an email conversation between the controller and the AR manager. So it's called, I call it audit layering. So let's talk about documentation in Excel. You know, the question really in the marketplace when we audit controls is, are we really putting notations in Excel thoroughly? Does it really explain to someone as if they, let's say they really didn't know that much about the business. You had to give them a 5-minute overview of what the business does for a living, and you say, oh, by the way, this is how we book our AR allowance. Is there enough notation in your Excel documentation to get someone up to speed so that they can at least analyze your thought process and reach and understand how you reached your conclusion for that reserve, okay? You also have to show what other considerations were key in that thought process in Excel. And how do you document management's review? Because especially when there's multiple people involved, the AR manager is confined to a certain set of roles and responsibilities. Okay, they don't get the final say on the posting of the AR analysis. Their job is to collect that cash, make sure that AR is accurate and complete, throw out warning signals when things go over, right? Throw out warning signals when, let's say, something's current, but there's a big issue with that company in general because the sales team is starting to, gripe about not getting their bonuses and they're not understanding, or there's a management change. That's the parameters of how they function, right? So how do you document the review process if it takes multiple people to get to the right answer, like this AR manager, right, in Excel? If they're committing to an input, an email, or a comment, remember, they have to agree that that was the final version of what they agreed to in your analysis. And every reviewer is different, right? So a assistant controller looks at things differently than the controller, and definitely the CFO looks at something different than the controller does, right? So each one is evaluating the exposure, the risk, and the analysis differently. And all of that needs to be documented of, okay, well, what is your role and function, and what are you looking for in general when you're booking that AR analysis? So here is our firm's analysis of something that we created. Gosh, we must have created this maybe a year or two ago. But I wanted to, before I get into an item here, I wanted to ask Ron, are you seeing any difference in the marketplace with your clients trying to deal with Excel? And my specific question is this: are people using less Excel, or it's business as usual, or the third bucket is, you know what, they're actually using more Excel because for whatever reason they're not making the investments to upgrade their system to actually let the system do what it should be doing? What are you seeing in the marketplace in terms of usage of Excel in the marketplace?
Good question, Sonia. And I think it varies quite a bit, but we're definitely seeing, with the use of our tools, that their Excel inventory is typically growing over time. We've had a lot of clients come to us and they want to reduce their Excel spreadsheet usage, but the problem is they can never get there. The spreadsheets are easy to use. Everybody knows how to use them. So moving away from spreadsheets is difficult for most clients. So I would say for many clients it's business as usual, and for many others it's growing out of control.
Exactly. We try to anchor our clients down to a certain set of types of Excel spreadsheets. So that way we put them into categories, and the very first critical step is like, well, let's just inventory what you have. Right. That one exercise is extremely difficult because they're like, well, wait a minute, well, which department are you talking about, right? That's the first question. It's like, well, is it HR? Is it the sales? Is it finance and accounting? Is it IT? Who needs to be counted, right? That's the first question we typically ask. So look, since we're only doing Sarbanes-Oxley 404 analysis for you, it's those Excel spreadsheets that tie into your final 10K and your 10Q numbers, okay? So if those are critical, that's what we need to inventory. And believe it or not, when we get them to actually start that inventory process, what we have found is people have created subfolders, right? It's like, here's the accounting folder, and it's in, drive D or E or whatever. And everybody, right, everybody supposedly understands the rule, right, that, okay, if it's the monthly reporting package, it goes in this particular, folder within drive E. It's a shared folder for the department, and that's it. But lo and behold, when we do interview processes with different stakeholders in the accounting department, we say, well, okay, is this the final version, right? Before I audit stuff, is this the final version that we can audit? Because I don't want to audit a draft and then find out that there were errors, which I'll find them. But what I find is that there's these other folders on people's desktops, and say, oh, well, let me double check, right? And that's when I know the policy really isn't working. So Ron, Can you share with the participants some of the best practices when it comes to people putting in place a realistic policy of inventorying what they're supposed to be putting in let's say, a shared drive?
Sure. Yeah, and I'll just share one story. So, we had one example of a customer engagement in which we took a look at their actuarial models in a spreadsheet. And this was a fairly critical spreadsheet that they were using for day-to-day risk calculations. And it turned out, as we did our analysis, that this spreadsheet was part of 425 other interconnected spreadsheets. So, they were fairly confident that the data was accurate and the spreadsheet was working as it should. But as we got deeper into the analysis with our software, we found that there were broken links within the model. There were links to outdated files, links to incorrect versions of files. It was obvious that over time, this collection of spreadsheets had become so overcomplicated that nobody could really explain it. So it's kind of funny, we're in a meeting room, and this actuarial person took one look at what we presented and quietly exited the room to go and investigate the issue. So, having rules around your spreadsheets and documenting and knowing what's out there and how they're interconnected, how the data lineage is flowing is critical to your spreadsheets.
Yeah, and going back to the linking, some of the end users know the functionality, but they don't know the risks involved. So if you've created a link between two spreadsheets, you go from cell A1 and then you link it to a completely different cell in a different file. If that thing gets moved, those links need to be updated, right? Because Excel is not that sophisticated. It just assumes it's the data point from this other file name. So if you literally moved it from your desktop to that shared file, Excel thinks like, oh no, I'm picking up the data from the C drive on your computer. The fact that now all the data is now in the E shared drive, depending on the version you have in Excel, it's not going to warn you, go, hey, by the way, do you want to update me? I used to be on C, and now I think I'm on E, but can you double check me? It's really up to the user to remember those risks that I got to update those links. And that's where, like to your example about this firm, and I can't even believe they have over 400 other links. That's a record, Ron. I grew up 10, 15, 400. That's a lot.
Yeah.
That's amazing. Here's what I wanted to share in terms of risks. Okay. Here's what the guidance has said about inventorying your risks, and not every worksheet is the same, and those high risk items need to be dealt with differently. So here's how our firm has completed using the ITGI guidance. This file is a free downloadable file for you live participants. It's called 2013 Critical Spreadsheets _webinar. Afterwards, our contact information is going to be available. You can email it to, say, hey, I want blah, 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 Excel file. I'll give it to you. Here's the generic gist of this tool. The ITGI, which is Information Technology Governance Institute, years ago said, hey, I've got a way of determining what should be in or out of scope. And the first thing you got to do is you got to check on your materiality of the worksheet, right? So if a worksheet is used to reconcile petty cash, and petty cash that the secretary typically takes care of is $500, it's probably not going to meet your threshold right here, which I have $500,000. It's a little hard to see. But the point is, this Excel spreadsheet kind of helps you determine from a materiality standpoint and a qualitative standpoint whether or not something should be considered in or out of scope, and we have a column right here called, in scope or out of scope. And if it's in scope, if there's a yes, well, guess what? We're auditors. We need a work paper, right? We absolutely need to have a unique work paper number to deal with this. And we've got a question here, and I don't know if you can maybe chat with me about that question. I think it's Robert. You've got a question. Just hit something in the chat box, and I can see your raised hand question. So in short, you would create a remark as to why it's in scope and how did you reach the conclusion. And there's obviously a purpose and a value. Okay, purpose is your qualitative analysis and the value is your quantitative analysis. So after done with that, you would complete a high, medium, and low risk for those in-scope spreadsheets. And I know it looks a little complicated, so for those of you who just started out inventorying your spreadsheets, you would have to figure out, based on materiality, let's say it's a 500K, okay, well, what's the impact, right? So this is the value, the dollar, the significance, and then what's the likelihood of something bad happening? And then you have a combined risk score. So all of these are quantifiable, like this is a 1, this is a 3, and there's target numbers, it's 1 through 3. Ultimately, you get to high, medium, and low. Okay, that's the gist of this whole worksheet. This is to evaluate what's high, medium, and low using the ITGI guidance. So you do need to have a good set of audit skills to complete it. I would not give this to a staff 1 out of college. I would give this to an audit manager to complete. And after you're done, you're actually going to test it, right? So it's not something that we would, the stuff that's in scope, we want to test it. The guidance says that if it's low risk, there's no action to be taken, right? I know it sounds counterintuitive for us auditors. It's like, well, low risk, I got to do something. The general understanding is that the management team has compensating controls over those low risk spreadsheets, okay? But if the answer is no, meaning you don't have good internal control structure, you don't have any high-level controls, you actually do have to do something. So the assumption in the guidance is we assume, okay, for those low-risk spreadsheets, that management has active, good compensating controls, and therefore, on a low-risk spreadsheet, you really don't have to do testing because those compensating controls would have caught it. Moderate and high risk, that's where you do some testing, right? And they have some testing guidelines, and we have the different steps here for the testing in our little template here. Now, I wanted to cover something, Ron. I want to pass the ball to you on the automated version, right? Because what I just shared was a arduous manual. I've got to interview people to make sure my worksheet's right. I got to now test it. I got to now I got to complete 7 tests. When you and I met, I was like, this is crazy. This is, our audit hours just on spreadsheets went up a lot, right? Because the external auditors are now being scrutinized, and now I've got, those 7 tests. Now I'm finding more stuff being done to spreadsheets. So I wanted to find out your thoughts on the automated version that you're seeing in the marketplace that works for spreadsheets and controlling that.
Right. So, we really help clients. We manage the entire life cycle of the spreadsheet, starting with the inventory and risk assessment. So, I'll just share another story. So we're in the early stages of engagement with one of our clients, and we asked them, and this was a large bank, how many spreadsheets they thought they had. And initially they came back to us and said that, and they were pretty confident, they had about 1 million spreadsheets globally. A few days later, they came back and told us that, they took another look and, they're sure it's about 5 million spreadsheets. So when we actually got actively engaged with the client and ran the scan, we found 20 million spreadsheets within their organization globally. Now, this is an extreme case, but understanding what you have out there for spreadsheets and what's critical is really a big problem for organizations. And what we find is that they're typically off by the number that they think they have by, usually it's a factor of 10 or more. So just to give you an idea of, some of the clients that we work with, what they think they have and what they actually have are two completely different things. So if you can just help me with the...
Yeah, sure. So what we have is, I think we wanted to cover the difference because you and I know you have different solutions. So yeah, exactly.
Okay, I was just trying to figure out how to advance through the slide deck here. So missing a picture. Okay, so step one in the process that Sonia outlined earlier is to understand what you have and create an inventory. So if you're not dealing with a lot of spreadsheets, this might be pretty simple to do manually, but for many of our clients, it's really a big issue. They have 10,000, 100,000 or more spreadsheets across different departments, different versions, different owners. They vary in their criticality. So sorting through these with these numbers is a pretty daunting task. So we help to automate this process. One of our tools will go out, scan your network, and create the inventory for you. You can see here in the picture that we have an example of a scan that we did, and we're showing the different files, who owns those files, when they were last modified, the size of the files, number of formulas, and actually this screen would actually go over another 50 or so more columns with more data, but we assess those files for risk based on complexity and materiality, and you can see visually red indicating high risk file, orange indicating medium or moderate risk, and green indicating low risk files. So you can quickly and easily sort through thousands of different files to figure out which ones you might want to focus on. And we can show you through different dashboards where those files exist, what departments have them, and what is their mix of high, medium, and low risk files. Another example of the dashboard here. So
management every year could change like the materiality, right? Or they can change some of the risk factors if their business model were to change, or are these pretty stagnant category? Like, for example, like when we audit, materiality is calculated every year, right? Because the business could, revenue could go up, net income could go up or down. In the software thing, I mean, could it actually adjust as needed per year for each company, or how does that work?
Yeah, so that's a great question. So as you stated, and there could be different risk profiles for different departments, right? What's risky for the finance department might be different than what's risky for the lending department. So within the tool, you can create different risk profiles by department to help you to sort through, what is a risky file and what's not a risky file. And some things might, like a credit card pattern might indicate that that's a risky file, or certain keywords such as millions or billions within the spreadsheet might indicate a risky file. So these, come out of the box with default calculations, but then you can tweak these to benefit the needs of each department so that you're accurately portraying the risk of the files.
I can see that you've got like by department and all that good stuff, because most of our clients deal with it manually, and it's just don't tell me my entire department. Just tell me we're just even struggling getting them to identify closing of the books. Forget about what they use for other stuff, because for example, they may want to execute a joint venture agreement, right? So there's going to be financial modeling done, okay? It's confidential. It's not going to be on their 10K or 10Q, right, until the deal's done. But it's a critical spreadsheet for the finance team because the board is actually making, very strategic decisions on it, right? So we have an extremely limited view. I always feel like we're always like, behind, a few days before, the management team actually, gets their arms around their own spreadsheet. You know what I mean? It's like the criticality of certain spreadsheets goes beyond SOX. And then when we met, I was telling, we were just sharing some ideas that there's some things that are being done modeling wise that people are making some concrete decisions on, but yet they don't know if there's errors in it. And that's something bigger that I think that is a bigger issue. Like my parameter, my viewpoint is so pigeonholed, right, to just this very narrow thing. And that's something that I warn clients is like, remember, I'm only looking at this, right? I don't know the exposure of everything outside of your department. And of course, most of our CFOs definitely understand that, but then they don't know what they don't know, right? They don't know their true exposure of other critical things that are funneling into the board. And oddly enough, since the CFO does a lot of the prep work for, let's say, stuff like that, they're going to do a joint venture agreement, or they're going to buy another entity and they're involved in the due diligence, what have you. God forbid you challenge them on their spreadsheet, right?
Yeah, that's a great point. We have a lot of clients that say exactly that. They don't know what they don't know. And, we help to answer a lot of those questions about, what they have out there, and then, taking a deep dive within their critical spreadsheets to find issues within their models, such as that one example that I shared earlier. But there's been, several others where what they thought they had and was working properly, turns out was not, had errors in them. And if those are feeding subsidiary business systems or other spreadsheets, that data is going to be bad as well.
Yeah, I agree. So share with us this report. I really like this one that we were talking about earlier at the conference.
Right. So the software, is built to analyze hundreds, thousands, millions of different files and automatically assess them for risk. And we assess them for risk based on many different factors. So what you're seeing here is after you've run the scan and you've created your inventory, and you want to take a look at an individual file, you can right-click into that file to take a look at the risk scorecard for that file. And this shows you, what makes up the bulk of the risk within that folder. So here you can see that the individual factors that are driving risk for that particular file are number of formulas with blank cells, number of formulas, and number of formulas with errors. So you can see those are color-coded. I don't know what that color is. It's a pinkish color. There is number of formulas with blank cells. The orange color is just the number of formulas, and the yellow color is the number of formulas with errors. So you can take a deep dive into what is driving the risk for a particular file. And then you can override that risk as well, because maybe you're aware that there should be a lot of formulas within that file. So you can adjust the attribute risk factor, which you see in the middle column there, to suit your particular department, and make sure that you have an accurate risk profile for a particular file.
Mm-hmm. Yeah, this is giving you a better exposure what each high risk is. It gives you a better balanced scorecard of what's the composition of that risk, rather than just making a blanket assumption, so you can dive deeper into that particular file.
Exactly.
Yeah.
And then, we also provide a enterprise, what we call EUC map, and EUC is just an acronym for end user computing, or the spreadsheets and access databases. So what you see here is a visual illustration on the data lineage of your spreadsheet model. So in the example that I mentioned earlier, this is one of the tools that we use to show the actuary where the problems in the spreadsheet model existed. This map not only shows how your spreadsheets are connected to each other, but also other data feeds that exist within the spreadsheet, such as databases, links, queries, and macros. You can see how your data is flowing with the arrows. So your Excel files are the rectangular shaped files. If they're red, that indicates that that's a high risk critical file. A yellow is medium risk and green is low risk. You can see how the data is flowing with the arrows. So in this particular model, it's flowing left to right, which it should be, and not going back and forth. And you can see how those data connections are made. So a macro link would be a red arrow, a green arrow is a name range link. You can see broken links in the files by the two red bars.
Wow.
And then you can also see stale links by the two question marks within the link. So,
yeah, that's empowering.
So for instance, so you can see, financial statements is a critical file being fed by the Q1 financial statements. So the Q1 financial statements has been updated, but financial statements has not been updated. So you might want to get in there and make sure that those files are updated, because they're all feeding into a PowerPoint, probably of some manager, and you want to make sure that that data is accurate. And then you can also see down here at the bottom left your Q2 cash flows version 2. There's a broken link between that and Q3 operations. However, and that's not connected to anything. And up in your model, you have a Q2 cash flows, which is feeding a critical Q2 financial statements file. So maybe your version 2 file should be feeding that rather than your version 1 file. So it provides a visual into what your spreadsheet model looks like and where there is potential errors within that model. So providing the full data lineage of your spreadsheet model. And then the second step in the process that Sonia brought up earlier is to actually take a deep dive and test your spreadsheets. So we provide a great time-saving tool, which is just to plug into Excel for testing and analyzing your spreadsheets for errors. And we do this without changing any of the data. So what it is just an overlay map on your spreadsheet to show you visually where your problems might exist. This particular tool has over 50 different analysis that you can run to find things that you might not catch manually analyzing your spreadsheet. So things like invisible cells, numbers formatted as text, inconsistent formulas with constants, and there's over 50 other analysis that you can run. They're all color-coded, which you can see in the formula analysis key there. So you can quickly and easily, take a look at a spreadsheet and find where your errors might exist. It's a great...
I just think
Go ahead.
I wanted to add in something about tools and so forth, because when we met, I know the auditors take any of the big top eight firms, when our clients get audited and we say we've tested it, we go through this arduous worksheet, lead sheet, this tool, when we spoke, because see, you don't corrupt the data. That needs to be reiterated in this webinar for sure, is you get to apply a test on the actual file itself without corrupting it, okay? So when the auditors pick up that worksheet, you're like, well, did you test it? Yes, I have. Here is my test scripting, right? It's here, you give them the legend. And this is how I validated it, okay? But you don't corrupt the data, because that's the whole point of when you use a tool, they're like, well, how do we know? And also the client, quite frankly, how do I know you're not going to mess it up? I'm not going to give you the live version that we ultimately have final. I'll give you a copy of it, right? That's typically what they want to give us. Okay, and that's fine. It's the validation process without corrupting the data that we like to prove to both external and the client, saying we haven't corrupted your data. Okay.
And a great tool for the users as well, so they can use it to see, before they hand it off to, their internal auditor or whoever the case may be, that there's no errors. So, for instance, in this particular overlay map, you can see, I'll just show you one thing. So we're seeing formula consistency. So in row 15 there, you see it's highlighted across in light purple, and then when you get to column H, that one is indicated in it looks like a blue. So it kind of sticks out like a sore thumb that it's not consistent with the formulas that are to the left and to the right of it. Now, that might not be a problem, but you might want to take a look at it, because it could be an issue where somebody dragged the formula across and missed that particular cell, so it's different than its neighbor. So it just provides easy analysis so that you can take a look at your spreadsheets to make sure it's consistent and error-free before it goes on to your auditors.
You know what? Every auditor has this rule of 5, right? I don't know where 5 came from. Maybe it was in one of the textbooks. But that overview, that overlay, where all the tests and the purple and the color, I mean, that tells someone, both, like you said, the client as well as an internal auditor or external auditor, okay, pick your sample of 5 formulas from these, because that has the highest probability, if there's going to be an issue, right? These are where the highest probabilities are going to be at. It could be nothing, but hour for audit hour, you're spending your time more effectively, because if everything else is just normal, right? There's no anomaly. You've now used most of your hours in the most cost-effective way on something that could be an anomaly. That's the key there.
Right. Exactly. And then we also provide the reporting, as you mentioned, in documentation, which is proof that the spreadsheet was tested and analyzed. So then, this is a protected report that could go over to an auditor as proof that this spreadsheet was analyzed, and here's the summary of the analysis, and you can see here some of the issues within that spreadsheet, formula cells, blank cells, and so on. And then you can archive these so that you have proof that the audit was done on a particular spreadsheet.
Yeah, I mean, you're singing like it's the audit trail of the audit, and that's key, because I mean, you talk to any attorney, which God forbid anybody gets sued here, but the audit trail of the audit is critical.
Exactly. And then so once you've identified all your spreadsheets and created the inventory, and you've done your remediation and testing, you probably gonna put controls in place so that when changes are made to those spreadsheets, we'll capture the audit trail, provide automated alerts. So if somebody goes in there, changes a formula within a critical spreadsheet, it's going to notify somebody immediately, so that they can either approve that change, or they can investigate what's going on if that's a critical file. And then this is going to help, when it comes to financial close, to be able to report, on the changes and verify and view and make sure that everything is what it's supposed to be. We also provide versioning. I think, Sonia, you mentioned earlier on that there's a number of different versions, and how do you keep track of all the different versions that are out there. So with our tool, you can create snapshots of spreadsheets at key points in time, like after financial close, for instance. That can be one version, and then you can compare that to other versions in time, so that you can see where changes are being made, if certain thresholds are being broken, and provide versioning control, which is going to help to speed up reviews and approvals. And then we also provide a structured and fully documented workflow and review process, which will help speed reviews and financial close. And I know we're running short on hot time, so I'm just moving quickly.
This is the part where it goes to the PCAOB Audit Alert 11, right? I get to put in, if I'm the AR manager, and my limited power, right, of the analysis of AR is limited to providing sales data or product data to the controller so that he or she can make that ultimate AJE decision, right? This is where you're allowing, right, in the tool to say document management stop process, right? Because remember, the hard copy was the one that was signed. So you have two choices. You can either put a bunch of comment boxes everywhere, right? Like on the formulas and here, and that's fine. If you're a small shop and you've got like one or two accounts, okay, I get it. But when you start decentralizing your accounting department because you got somebody in Singapore, somebody in Hong Kong, etc., I don't know. I don't know at corporate office what's going on in those spreadsheets and what the thought process, the level of precision, and that this is where the link happens in the management review process. So I'm sorry, I kind of had to chime in there because this is definitely the link to that audit alert of level of precision. This is what I'm seeing in the marketplace since last year, and it's going to continue forward to be a big deal.
Right, exactly, and I think you said it perfectly. So, we have a lot of our clients that are using this workflow to document and the workflow of their spreadsheets and have an approval process, so that to your point about the level of precision, all the way down to the formulas within the spreadsheet. So you can approve an entire spreadsheet or certain aspects of the spreadsheet and reject others, so that that audit trail is there, and that you're fully reviewed, and it provides a structured process to move the spreadsheets through the organization and through the appropriate approvals. Now, there's several benefits, aside from just reducing risk from your spreadsheets, from having uncontrolled spreadsheets. For Excel owners and approvers, reducing errors is a big one. Identifying high-risk files, faster approvals at financial close. For the auditors, there's reducing costs from audits that used to rely on manual processes alone. For management, reducing risk from spreadsheet errors that can cause not only financial loss, but damage reputation. We've all heard of the several companies that have been, on Google or in the news because they've suffered huge losses from either spreadsheet error, spreadsheet fraud, or even fines from having poor controls within their spreadsheets. So just in closing, so we can help clients reduce spreadsheet errors, provide significant time savings by implementing a process that is traceable, repeatable, accountable, audible, and consistent. And that is all I had. Thank you very much, Sonia.
Yeah, thank you, Ron, for sharing that. For those of you who are attending, get your friends to join the COSO implementation group. As you know, we're providing this free CPE webinar because you are a COSO member. This is the hyperlink on where to join. And I spoke with Ron. Most of you know who are live here with us. We, Aviva, we have a control compliance analysis. So I know some of you are either doing one of two things. One, you're either transitioning to this new PCAOB Audit Alert 11, meaning you're not sure if you're, looking at things correctly, your narratives or flowcharts aren't up to snuff. We actually provide an intake analysis. It's a 1-hour interview. We benchmark you to actually 3 different studies in the marketplace to find out where you are, both in either the COSO transition or in this PCAOB Audit Alert 11. And ultimately, we give you a report. I had to make it super small so no one would see. But this is the kind of report that we provide in the analysis. And I only have 5 spots. My admin takes care of my calendar. And as you know, you just click email at info@avivaspectrum.com. But I was able to strong arm Ron, okay, for the COSO implementation group members. We have a free Excel toolkit, which is at least a $400 value for the first 5 people who want to email for a free copy of this Excel audit software package. It's well over that amount, but you have to email just the same thing, info@avivaspectrum.com. And the subject, okay, of this is Excel audit, no duh, right, because it's a software package, to get it. And I can strong arm Ron to give you a free copy. There's nothing like, telling someone like, hey, you could do this manually, and oh, by the way, here's one option. Hello, if you want to try it out, risk-free, check it out. We've got it for 5 people, but it's got to be today. And Ron is not going to be committed to this by the end of the week or anything like that. It's got to be today. So my admin's going to take care of it, and it's limited 1 license per company, and it should be hopefully you that participated in the webinar to test it out. Our only comment to this is that you provide us good quality feedback to both Ron and I. We are thought leaders in our space. We love what we do. We want to be the best at it. So when Ron gives you this, he wants feedback. He wants to say what went well, what didn't go well, and that's an easy ask of a person who's giving you a free tool to check out and try on your own. Our contact information is located. You can see if you connect with us on LinkedIn. You can find me on LinkedIn. This slide presentation with all the hyperlinks and all that lovely stuff that I love to do is going to be on slideshare.net. And then you can obviously see this video later on in our podcast. We put the webinars up. And here's Ron. Here's this dashing young man here in LinkedIn.
Thank you very much.
Yeah. Here's his email direct, but remember for that offer, I want you guys to type in info@Aviva Spectrum. So we'll have a couple of minutes for questions. There's a Q&A box for those of you who would like to submit some questions. For those of you who raise your hand, I pinged you offline, so please do submit your questions now. So for those, I'll send out to everyone the chat just to make sure everybody's getting this. Please submit your questions now in the Q&A box. Okay, what question do we have? Okay, now. So Ron, I think this is a quiet group.
Yes, so.
I know.
They're all typing an email to get that free software, I think.
You know, they have that dual screen, and then the second one is. Okay. Okay, here we go. Did the speaker just say there was a 2 million? Yes. So there was a question: did the speaker just say that there were 2 million individual spreadsheets with one claim? It was actually, it was 20 million, right, Ron?
There was 20 million spreadsheets globally, yes.
Yes. So to that question, yes. We got a compliment here, Ron. Great web class question. How do we get our CPE certificate? You'll get it at the end via email. And then another one is, has this evidence of spreadsheet analysis been accepted by any of the big four? So Ron, do the big four like your stuff? Do they go thumbs up?
They do.
Okay.
They do. They are aware of it. Some of them even use it. Yes.
Okay. They love it. Okay. What will that toolkit narrow down to just the critical spreadsheets? So in other words, I guess the totality of the population of spreadsheets, and could you just narrow it down to the critical ones? Like, does it do both? Does it give you total, hey, by the way, FYI, you've got X, and then boom, tone it down to just the critical spreadsheets?
So there's three different tools that I talked about. So it sounds like they're talking about the inventory tool. And there's several filters that you can apply if you don't want to look at certain, maybe you don't want to look at files that haven't been opened in a year, or you don't want to look at, certain types of files. Maybe you don't want to look at any XLS files. You only want to look at XLSX or XLSM. So there's a number of different filters that you can apply so you're not pulling in all your spreadsheets. I'm hoping that that's answering the question.
Yeah, I think given the different products. So is Excel Audit the one that people use mainly to audit their spreadsheets, like an internal audit department or an external audit firm? Would they use that tool?
Right. So Excel Audit is for taking a deep dive into individual spreadsheets, and Excel Risk, which is the scanning and inventory tool, that looks at your entire spreadsheet population, creates the inventory, and does the risk assessment.
Yeah, excellent. All right, well, that seems to be all the questions we have. I want to say thank you for being here. There's actually one other. We have found that there is not much distinction between those management reviews that are judgment-based versus those which were clearly a binary yes or no. What techniques are successful in integrating these with external auditors? Okay, so there's a question about how to get your external auditor to agree that there's certain aspects of your review that's either thumbs up or thumbs down, and then there's something that has some judgment. So what we've done is, if you write, so there's two ways of handling it. The first is a policy, right? You write down, this is our policy, blah, 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 blah. And if you get a couple of members of the executive management team to kind of bless that policy, you show the auditor, okay, when we get to this part of the assessment, it's judgment, and then this piece of the judgment is just a yes or no. Let's say it's an item that you have to analyze, and it's just either this or that, and that's it. Those are you only have two options. That really gets the external auditors off your back, right? Because it's written down, right? And it's in a policy format. It's been reviewed. The policy's been reviewed. And then if you consistently apply it, you should be golden. So that's one way to kind of get your auditors to understand, when you say I do management's judgment on this particular number and there's 5 things I look at, one of those 5 things is just honestly a yes or no. Verbally telling them that is one thing, and putting it in Excel and documenting it, okay, fine, you can do that. But remember, you've got to do that every single time. But if you have a written policy that's been approved, you're now in a whole different ballgame in auditing. So it gets them off their back. Well, thank you very much. I hope all of you connect with both Ron and I later today. And remember, info at Aviva, I'm going to take this in, spectrum.com, or the software or CTA. Only 5 spots for each. I'm just sending everybody a quick email here. We hope you connect with us, and we appreciate you being here with us today. Thanks a lot, Ron.
Thank you, Sonia. Thank you.